Okay, good evening, everyone. Welcome to our TSM webinar series. As is part of this series, we are conducting two webinars. So, today we are starting with Understanding Business from Financial Statements by Professor Arunkumar. So, before we move into the webinar, let me quickly introduce TSM and also about our MDP programs. Then I will hand over to Professor Arunkumar. Okay, so about TSM, TSM was established in year 1962. It's an autonomous institution. We run two programs, MBA and PGDM, total intake of 240 students. We are located in a 17-acre campus near Thiagarajar, Madurai. Our faculty are highly qualified and highly experienced. Many of them have PhDs from IITs, IIMs, and NITs. As part of our corporate connectivity initiatives, we conduct a lot of programs, both in-campus programs as well as online programs, both for particular companies as well as open enrollment programs. This is our list of open enrollment programs which we are conducting for this year. Okay, so we are conducting across all areas: marketing, OB and HR, operations, finance, IT, and general management. So these are open enrollment programs, meaning anyone can enroll and participate. In addition to this, we also do company-specific programs, wherein we run programs for particular companies, for both middle management and senior management. Okay. So with that quick introduction about TSM and about our MDP programs, let me quickly introduce Professor Arunkumar, who is going to handle the webinar today. So Professor Arunkumar, he is a chartered accountant, company secretary. He has around 13 years of experience in the areas of audit and treasury. He is an associate member of Institute of Chartered Accountants of India and a licentiate member of Institute of Company Secretaries of India. He has secured highest marks in Southern region in Company Secretaryship exam, Management Information, Corporate Communication. His teaching interests include financial accounting, cost accounting, and taxation. So at TSM is part of finance area and is one of the most vibrant area at TSM. So without much delay, let me hand it over to Professor Arunkumar to handle the webinar today. Thank you.
So good evening to all. So thanks, I thank Balaji sir for giving me this opportunity to handle a session and for my nice introduction. And as part of this one, before starting this one, I think mostly now 49 participants are there. So first we'll take a quick survey. So you scan this code, you scan this QR code and you will be driven to Mentimeter. There one pool will be there. So you answer for the questions. Based on that, we can proceed with the further things. So you scan this code. If you are not able to scan this code now, I will type in the chat box the code. So that will be good for you. If you are unable to scan the code now, you can use the code which I sent in the chat box. You use that one and participate in the survey so that I can understand about your profile. If you are having any doubt now, you type in the chat box, because as a procedure we have muted all the participants. You are not able to speak, so better you can understand. And if you are having any doubt now, you type in the chat box. Okay, I think we can start. Whoever here after joins, let them understand what. So you are expecting best from the financial statements. So I will try to give some best. So and the participants profile is mostly students are there, but the finance executive bank people who are working in companies are also there, and some business owners also there. So we will try to cover overall the people. Yeah, mostly because students, though they are more, we'll try to cover for because though this program is basically for these executives, so we'll try to cover those executive areas. Okay. So the session plan is what? First, we are going to see about the financial statements, both income statement, balance sheet, and cash flow statement. We are going to see. Then we are going to see understanding the trend, how a trend can be understood in your business, and then we are going to see the identifying the strength of your company, whether the company is going good or bad. That we can know. Then we will be going through the decision making tools. Some of the decision making tools, which we are going to see today. Then we will have question session. So question session mostly we will be having at the end of the session. So whatever you are going the question, you type in the chat box so that at the end I will answer. In between, if you are having, we may have some connectivity issues and it may delay the process. So instead of that, we will have the question session at the end. And what will be the questions, I will reply to your questions. So next thing is ultimately we will have one quiz so that I can also understand whether you understood what I taught and all. So ultimately we will have one quiz also. So with that thing we will close the session. So now we will move to financial statements. So that is income statement. So this is basically the income statement. Normally it consists of revenues and from that we will deduct all the expenses and profit. And this statement, what we are going to see now is basically for a non-finance executive. You may be get bored if you are a finance executive means, but basically it's for a non-finance executive to understand what is a basic income statement is and what are the further information he can collect from that income statement as a general perspective. It's not for an accountant, a debit credit rule and all we are not going to see. We are going to see only from the general perspective to understand what is an income statement is. So first what we'll do is normally revenue minus expense will give you the profit. And this is not the way in which as a business executive or a business person, you need to understand the income statement. So further you will need to analyze more things. So what are those things are? Revenue, from revenue, first you deduct your direct expense. Whether you are a manufacturer or a trader, you deduct the main expenses which is required for a product. So that will give you to understand a contribution. This is a new term. New term we need to understand. So what is a contribution is? Contribution is the contribution. The revenue in excess of direct expenses. So revenue in excess of direct expenses is called contribution. We need to see this one now. See, I am a trader. I am a trader in any product. I am going to be a dealer of some branded product. I am a dealer of a branded product. So what will be my direct expense? Direct expense means the cost, whatever I am paying for the branded product, cost of the branded product. And my freight charges is there. Without freight, I can't buy the product. So freight for the product, freight of the product. And if I'm having any employees, direct employees are there, na? Employee wages. So these will be the major expenses for me, employee wages. So these are the major expenses for a trader. This is the direct expenses for a trader. If you are a trader means this will be your major direct expenses. So your income, whatever price you are fixing, it should be definitely more than this direct expense. Obviously, it will be more than this direct expense, but more than this, how much I can fix the profit, how much I can fix the profit more than this. See, suppose we assume that this direct expense comes around some 140 rupees per product. Then how much product profit I can add? Can I add 30% profit or can I add 40% profit or can I add 50% profit? How much I can add? You may say that, sir, it's not that we can add whatever profit we want to include. So we can add only to the extent which can be saleable in the market. Suppose the selling price of the product is in the market is 160 rupees. Now we can't sell more than that. So we can sell more than this 160 rupees. My direct expense itself coming around, whatever we have calculated is 140 rupees. So my direct expense is 140 rupees. Then ultimately your contribution will be only 20 rupees. So what it means? Contribution of 20 rupees. So what it means? So here it means that I am having only 20 rupees to incur for other expenses. Other expenses means indirect expenses. Indirect expense, some of the indirect expense which I put is salary to worker. That means your fixed expenses, monthly fixed expense, whether you are doing the work or not. These indirect or supporting expenses will be regularly incurred. So I will explain what these type of expenses are. If you are going to increase certain amount of expenses under these category, will your income will increase now? Definitely it won't increase. Definitely it won't increase. If you are going to increase the salary, increase in salary of monthly worker, whether he works or not, you will pay the salary. So if you are going to increase the salary of that worker now, he can't directly go and contribute for increase in the revenue. But if you are going to increase the wages of your daily worker who is contributing revenue, because his wages is directly related to the sales whatever he is giving for the business. So that time, if you are increasing his wages or if you are going to increase the number of your daily workers now, definitely there will be an increase in the revenue will be there. So then as a business owner or business executive, you need to concentrate on these expenses only, on these expenses only. So if you are going to reduce these expenses, definitely there will be a hit in the revenue. If you are going to increase this revenue, definitely there will be increase this expense, definitely there will be an increase in the revenue will be there. So then as a business entrepreneur or business executive, I need to concentrate on these expenses to increase my contribution. But here is the case where my selling price is 160 rupees, but my direct expense is 140 rupees. I am getting only 20 rupees as contribution, but my supporting expenses, my salary expenses is there, rent is there, bank interest is there, everything comes around. Actually, my indirect expense is coming around 100 rupees per product, 100 per product. So that means you are ending up your loss of, because your contribution is 20 and indirect expense is 100. So there arises a loss of 80 rupees. So now how to reduce the expense loss? How to reduce the loss? Either you can go and reduce the direct expense by reducing the direct expense, or reducing the indirect expense. Which one will be better? Which one will be better? So here you need to see these are the expenses. Which one we can come down? Which you can bring down all the among these expenses? Whether I can go and reduce my raw material if I'm a manufacturer, that not be possible. If I'm a trader, can I go and reduce the cost of my branded product? That also not possible. But you can go and try for reducing these things. These only mostly possible, and it will have permanent effect. So whenever you are going for reducing the cost, it should have a permanent effect. So the permanent effect can be achieved. Permanent effect means every time it will get reduced so that ultimately you will arrive at a profit. So permanent effect natured expenses only should be targeted. Only should be targeted for reduction. So this is the basic idea. So important things, whatever I feel is important for you, we will have in different color, so that this Excel will be shared with you. That time also you can refer these things. So first, as a business entrepreneur or business executive, you try to reduce these expenses. We are not going to see an income statement as an income statement. We are going to see how we can contribute for the business through the income statement. By understanding the income statement properly, how we can contribute means, so whenever you are planning for reduction of expenses to arrive at a profit, try for these expenses. Permanent effect natured expense. Permanent effect nature means, see, suppose I am in a own building. I am in a own building. Whether own building will have any rent impact, there won't be definitely any rent impact. It's not required for you to pay any rent. But if there is a chance to let again, that means you are having a own building, you are going to let out some portion to outsider, means it will go and give some income to you. That will have permanent effect. Permanently, you will get some income which will go and reduce your supporting expenses. The supporting expenses, because Even if I open my shop, I need to pay for these people. For these people, I need to pay for the interest. Whether there is business or not, I will be incurring these expenses. Whether there is business or not, whether really I am selling any product or not that day, I'll be incurring these expenses. To reduce these things, if possible, you let out some of your property so that it will have some income. So that is one way in which you can reduce these expenses by permanent nature, or avoid such expenses in the nature that bank interest, try for increasing, reducing the rate of interest. So that will have permanent effect. Salaried worker, instead of salaried paid monthly worker, you convert them as a daily worker. You pay whenever they are coming for a job. Whenever there is no requirement for the job, ask them to stay in home. You don't pay them. So in that manner, you can go and reduce these supporting expenses. So that reduction in the supporting expenses will have a better impact. Will have a better impact in the increasing your profit. So in that manner, you need to monitor your income statement. So apart from normal income statement of deducting the expenses from the revenue, we are segregating the expenses into direct expense and indirect expense. And only we are going to concentrate on the direct expense and not the indirect expense. Indirect expense, you need to permanently go for reduction in the indirect expense. So ultimately, our learning is permanent effect natured expense only should be targeted for reduction. Mostly these will be indirect expense. Mostly these will be indirect expense. And next one is, so if you are going to reducing this one, if you are able to reduce this one to a level of 50, more than that it's not possible. Then what I can do? Then you try for increasing the sales price, because either of these things I need to do. I need to go for reduction in the direct expense or increase in the selling price. If selling price are being decided by the market, I am not able to increase the selling price now, then definitely you need to go for reduction in the direct expense. So reduction in the direct expense only will increase the contribution, based on which you can go for increasing your profit or reducing your loss. So these two things should always be in your mind. If you are a business executive and taking a decision for the company, or if you are a business owner and taking a decision for your own business, these things, two things should always be in your mind. So don't go for increase in your direct expense. It will go and hit your contribution. Ultimately, it won't be possible to make any profit. And one more thing here, among these two expenses, this direct expense and this indirect expense, this indirect expense is only not controllable. So that's also we need to have in mind. So indirect expense are always not controllable. Indirect expenses are not controllable, because some of the indirect expenses are statutory related. Statutory related expenses are there. So those expenses will not be reduced. Uh, we can't avoid those expenses. Definitely it will be incurred. So those expenses also we need to carefully monitor. So at the time for you, the only chance is to reduce the direct expense. So whether to reduce the direct expense or to reduce the indirect expense differs from business to business. How to do that and all, we are not going to see. It's being a part of separate MDP program we are offering. So that program you will see, but you have an idea that if you are having a business and you want to increase your profit, first you try to understand whether you are getting a contribution or not. Without having contribution, you are continuing with the business, expecting that in future you will get some profit, in future you will get some profit, or in next sale I will get some profit. Now, you may ultimately end up in loss, because without knowing that whether there is really a contribution or not, we need to know. So for that, I will tell you one small example. See, suppose a business is starting, okay, new new textile showroom opened. So if they're going to open a new textile showroom, now first year there will be huge advertisement expense will be there. First year, huge advertisement expense will be there. So this entire advertisement expense will be more than the revenue whatever they are earning. So first year huge advertisement expenses will be there, and to that extent they won't be having sufficient revenue also. So if you compare to the advertisement expenses, people will be knowing those things, but it's not that all the advertisement expenses whatever you incurred will converted as a revenue. People may not come, so people may hesitate to come. So at that time your revenue may be lower. Okay. So revenue may be comparatively lower as compared to advertisement expense, whatever we have spent, as compared to advertisement expense we have spent. So that time, ultimately you will arrive at a loss. But being a business owner or being a business executive, you should not tell that first year, because of huge advertisement expenses, I have incurred a loss, but next year, definitely I will make a profit and all. You should not tell. Why I am saying that? At the time also, in those first year also, you should have a positive contribution. That means whatever revenue you got and your direct expenses, less direct expense, if you put, it should have a positive contribution. Direct expenses, if you direct expense means I am a textile showroom, means what expense I will have, my purchase cost will be there, like we have seen purchase cost, then plus your freight charges, plus your employee wages, because they are only main source for your display of materials, and these are the main expenditures. So definitely your revenue should be more than that, and positive contribution should have been received. Positive contribution should have been received. You cannot go and say that since because first year I'm incurring huge since because this first year I am incurring huge advertisement expenses, but definitely in future I may earn a profit and all. But unless you are having a positive contribution in the first year itself, it will be very difficult to run the business. So always try to understand and bring into a clear idea that unless I am getting a positive contribution, I will not go and sell the product. So that is the basic idea. So only if there is positive contribution, even in the first year or in the very sleek period or now in the corona season also, you need to sell only if there is positive contribution. That means it should be able to recover your direct expenses. Without positive contribution, if you are continuously selling now, it will be very difficult to recover from the business. So in that scenario, so this is very wrong. That means only having 20 rupees as contribution, you should not better don't do the business. Your direct expense itself coming to 140 rupees, better don't do this product, go for some other product. Since because you are not able to increase the price, better leave the product. But somehow or other, you are able to reduce the direct expense to the level of 100, direct expense to the level of 80. So that time you will have some good amount of contribution. Then only you can survive in the business. Otherwise, it will be very difficult. And there is no specific percentage of contribution this much be received and all. Always your contribution should be more than the fixed expenses, whatever that is fixed expenses or indirect expenses. It should be always more than your indirect expense. 1 year or 2 years, you may get a loss, but ultimately you need to have always a better contribution more than your indirect expense. Sure. So those learnings and that we will type here. So learnings in this slide is positive contribution. Products only should be sold. Then contribution should be sufficiently high to cover up the supporting or indirect expenses. These indirect expenses, whatever indirect expenses we have mentioned, it should be sufficient enough to cover up your indirect expenses. So how to calculate the contribution, how to calculate the direct expenses, what are direct expenses, what are indirect expenses, and that we can have a detailed session. We can have a detailed session as part of MDP program. But this is basic idea. So whoever is attending as a business executive and want to understand about the income statement, you better have a look at your income statement in this manner, and whether do you really require an accountant to capture all these expenses. Definitely not required, because as being an entrepreneur or being a business executive, you will be definitely able to capture these expenses. It will be very difficult for you to capture all these things, all these expenses, but these expenses it will be very easy for you to, because you know you will have control over all these expenses. So better on a weekly basis or on a fortnight basis, you calculate these alone and have some amount of contribution as a target contribution, and try to achieve those contribution and proceed with your business. This should be ultimately in your business, because earning profit or not may depend upon various other factors, but earning positive contribution should be under your control. If you're not able to get positive contribution, then immediately change the product or reduce the direct expense. Try any one of these methods to get a positive contribution. Okay. Without positive contribution, don't try for selling those products, expecting that today one customer came. Since because he came saying that this company is having a lesser selling price, and you expect that in future also he will come and all, but he will never come. He will come only if your selling price is less. So selling him at a lesser price to get more customers in future is a bad idea. In this current situation of in this current situation of competition, getting a new customer by reducing the selling price is a very bad idea. If you feel that the product can be sold at this price now, you sell at that price and earn decent amount of contribution, then only you can survive in this competitive market. Otherwise you will be thrown out of the market. Yeah. So this is the basic idea about income statement. Whatever questions you are having as part of income statement, you can type in the chat box. We can discuss about it in later session. Yeah. That is end of the session. Then we will go for balance sheet. So in balance sheet, I want to tell you one thing. So this is the basic balance sheet. This is the basic balance sheet. So liability side, owner's money is there, and whatever profit is there, it is also owner's money. And operating business assets is there, and some of our investments, whatever supporting is for business, which is not related to the business, that will be there. And current liabilities, this is the business borrowing, suppliers will be there, and current assets, inventory, customers. This is the basic balance sheet. We are not going to go deep into the balance sheet and all. But here, what I want to tell you is, we need to draw an imaginary line in between. We need to draw one imaginary line in between. Why this line now? Whatever you are borrowing above the line should be utilized only for the assets above the line. That means borrowing in long-term purpose should be used for long-term assets only. Why I am saying to draw a line means these are the assets will have life more than 1 year. These are the assets. So more than these will have life more than 1 year. But these assets and liabilities will have life of less than 1 year. So whatever you are borrowing, that means bank borrowing, I am borrowing for a 5-year loan. It should be used for building up your factory building or building up your assets, not for inventory. And whatever you are borrowing for less than 1 year, it should only be used for bringing a inventory or giving loan to the customers, giving credit to the customers. What will happen? What will happen if I wrongly use this one? See, suppose I am using my long-term funds for this purpose. That means, so first situation one is borrowing 5-year loan and using that money, business stock is built up. That means you bought more goods to show to your customers as inventory, and for that purpose you bought a 5-year loan. So what will happen? What will happen now? See, 5-year loan, in what basis I need to repay? Suppose we assume that 5-year loan is for some 5 crores. So 5-year loan for 5 crores. As bankers are also there as part of participants. So they will be better knowing. 5-year loan for 5 crore. So roughly we will be paying something more than 10 lakhs. 10 lakhs as monthly EMI. So EMI will be 10 lakh. So 5-year loan I bought for 5 crores. So every month I am repaying some 10 lakh rupees. And I purchased inventory, that means stock, using that 5 crores for 3 crores only. 3 crores inventory purchased. So I purchased inventory using 5 crores for 3 crores. So my inventory is 3 crores. My long-term loan is 5 crores. So you are having sufficient of 2 crores in cash balance. You are having sufficient cash balance of 2 crores. So till next 1 year or 2 year, you can comfortably repay the loan using this cash, because business doesn't know color of cash. It doesn't know whether I am having the borrowed money as my surplus cash or my business profit as my surplus cash, we don't know. So next 1 year, you can comfortably run the business without even selling a single inventory, without even selling a single product, because you are having sufficient of 2 crores. So these 2 crores you can use for paying your suppliers. These 2 crores you can use for paying your employee salary. These 2 crores even you can use even for settling these loans and all. So this is totally wrong. This is totally wrong. Why means you won't have the urge to sell the 3 crore inventory. Though your product is getting very old and very old, but still you will continue to keep the product. You won't have any urgeness or interest in selling those products because there is no requirement of repayment. When they are going to get the money also, it's not that much difficulty will be there. But suppose you are building up these 3 crores by borrowing from the suppliers 3 crores. So definitely this supplier will come into your shop to ask for money. At least to repay this supplier, you will try to sell this inventory. So that is the way in which we should not do business. That means this money should never be used for this short-term purpose. It should be used only for this long-term purpose. Why long-term purpose? Like here you see, I am borrowing a 5-year loan to build up for what purpose? This is the 10 lakh EMI. So now I am building up my building infrastructure. That means my asset, building up fixed assets. So I am building up my fixed assets. So my fixed assets means I am building up my infrastructure and all. This will definitely give me income. So increasing fixed asset will give revenue. So that will be sufficient. That will be sufficient to repay the EMI. So you should plan in such a manner that you borrow some long-term loan, that is 5-year loan, and build up your asset, and that asset should bring in some revenue. That revenue should only be used for repaying the inventory EMI. It should not be like this. It should not be like this. This is a wrong thing. And really, these things happening. These things are happening, and those businesses are failing. So one example is ILFS, IL&FS. So IL&FS main failure was they borrowed in long term. And no, this is not the case. IL&FS is not the case. Kingfisher Airlines. So Kingfisher Airlines is the case in which they borrowed in long term and used for short term purpose. They are not able to repay the loan and ultimately they went for insolvency. So Kingfisher Airlines is an example for using the long term funds for short term purpose. So here they used long term funds for short-term purpose. Short-term purpose means building up their short-term assets. So this you should not do. So this should be avoided. This is an easy example is Kingfisher. Then we will go for second situation. Second situation is where you are going to use your short-term money. This short-term money for long-term purpose. So these things you should not do. These and all I am putting in red. This you should not do. Yeah, this you can do. Long-term money for long-term purpose you can do. Then situation 2 is I am borrowing a 6 months loan, 6-month loan, and building up my factory. So definitely by the time you complete 50% of your factory building, the repayment date of the loan will start. So the repayment date of the loan will start. So you won't have any money because here after completion of the factory, you will be able to generate some revenue. So that will be able to repay the loan. So it will have some time, and even for some long-term loan, they will give some moratorium period. So that 1 year you will build up the asset. So definitely it will be useful for you to repay the loan. It will be possible. But here the situation is totally different. Within 6 months, the lender will ask you to repay the entire loan. He will ask you to repay the entire loan. So that time it will be very difficult to repay the loan. So this also we should not do. And here the example is IL&FS. IL&FS is the example of using of short-term funds. Short-term funds used for long-term purpose. So this also you should not do, because what IL&FS did was they borrowed loan 6 months or 1 year loan and lent the loan. That is their business is borrowing and lending. So they lend the loan for 5 years, 10 years like that. They borrowed fully on short-term purpose. So this also we should not do. So this we need to do in this manner. That means this only allowed. So here this only allowed, and here also this only allowed, not like the cross. So cross mark you should not put. How I can know, sir? How I can know now? Regularly you maintain a list of your customer detail and list of your suppliers. and ensure that both are in line. My customers, my inventory data, or you will be able to know all these things. Being a business executive, even you are doing a short-term business or a big scale business also, you will be able to know what is the stock currently you are having. It's not the accurate thing required. On a rough estimate, you calculate what is the inventory currently I'm having, what is the customer dues I'm having, whether I'm having sufficient balance of my customer supplier balance is there to adequately contribute for my customer. That you need to closely monitor. Then only you won't go into a situation like this. Otherwise, in business, there is no color for money. Whether this money, that money, you will be using every money. So this should not be there. So here the correct thing is all inventories and customer dues should have sufficient supplier money. Should have supplier money. That means your supplier money should come into business so that will be used for lending this money. That means always your customer balance. Here one controversy is there. That means whether my inventory balance, that means my stock inventory plus customer dues should be more than my supplier dues, or it should be less than my supplier dues. Which one is correct? Whether I need to have more amount of supplier payment than my inventory and customer dues, or my customer dues should be more than my supplier dues. If you are analyzing company as a business banker's perspective, this is good. So this is good for banker because then only he can give money. So good for banker. Then only he will give money, short-term loans and that. But this is good for business. So this is the way you need to play. So good for business means it's not required for you to bring in any money. Okay, bring in any money. So this I will explain you. See, every business will have its own operating cycle. Every business will have its own operating cycle. Operating cycle means converting cash again to cash through business operation. That means using the cash, I am buying my raw material. So that raw material I am converting to finished goods. Conversion to finished goods. Here, if you are a trader, directly you will buy the finished goods and sell as a end goods. So because of which you will get on customer. Customer will come. Because you are selling for credit means customer will arise. So you will collect money from customer. So again you will get the cash. So these are the things will happen. Okay. So these are normally happening. Cashing, getting converted into cash through the business operation. This is normally operating cycle. Okay. So in this operating cycle, if you are having a supplier giving credit throughout the operating cycle means it will be good. And some suppliers may give money more than the operating cycle. Suppose you assume that this will take some roughly around some 40 days for you. Then if you are having a supplier more than these 40 days, that will be very good. 60 days supplier is there, very good, because you are borrowing from this supplier on credit, buying raw material on credit. You are not going to spend cash and you are going to repay the supplier after 60 days only. So definitely by the time you will get the cash. So that business is very good. So always try to have a business like this. Many big corporates are doing like this only. Many big corporates are doing like this. Always they will have the supplier days. That means the money they need to pay to their suppliers, the days available with the suppliers is more than the money what they need to get from the customer. So this is very good. But it's having its own risk. Why it's risky means, suppose if you are not able to repay this customer, repay this supplier, that will be very risky. So in this scenario, if you are having this scenario now, try to have, as earlier we have seen, contribution percentage more than 50%. That means if your business is able to generate more than 50% of your revenue as contribution, then you can go for this business. Then you can definitely go for this business. That will be very good. That means I'm having more supplier days than my customer days, and my profit percentage is also reasonably good. You can go. But if a profit percentage is relatively less than this, better don't do this thing. better you try to have more amount of customer days and go for some business loan, go for some business short-term loan. That will be better. Okay. So this one thing, this based on the operating cycle. So always this is good for business whenever your contribution is, whenever contribution is more than 50%. So how to calculate contribution, in what way it will help for my business, and all we are seeing here. And this is what called working capital management. This is called working capital management. Basically, this is called working capital management. Working capital management. Most of the companies are regularly doing these things. Working capital management. So basically, working capital management means current asset and current liability. That means short-term assets and short-term liability management. Short-term assets and short-term liability management. So what is the formula to calculate working capital? Is working capital is equal to current asset minus current liability. But here is a situation when your supplier days are more and your customer days and your operating cycle is less. So here arises a negative working capital. Negative working capital. Negative working capital in the sense your current liabilities are more. Current liabilities are more than current assets. So most of the bankers will not prefer such company because anyway you are not having any requirement of money. Your supplier itself is giving money. Banks will not give money for such company. But if you are having a negative working capital and contribution more than 50%, that is the best company. That is the best company. So you always try to have such a company, or if it is not possible within a year or within 2 or 3 years, but try to achieve this over the period of 10 years time. So this is a best thing. So whatever the company who is having expansion easily, who is going for higher growth, they are having mostly this model. So this also we can study if other session is there, so that we will probably cover in other session. But basic idea of this thing is working capital. If it is negative working capital means good. Otherwise, we need to put in money. We need to put in some working capital for our business and try to have this one. Yeah. Okay. So I hope I have given some fair idea about current asset, current liability, and liability, what needs to be matched against what. Now your long-term liability should only be matched against your long-term assets, and your short-term liability should only be matched against short-term asset. That means your short-term asset should be fair enough to cover your short-term liability, and your long-term asset should be fair enough to cover your long-term liability. And one more thing, one important thing is owner should take away the money, only the profit. Owner should not take away any other money. This supporting investment, that and all, we should not take away. So important point is, very, very important point is, owner should take from business only the profit. So this we need to know. How to know what is my profit? So here you are able to calculate the contribution. Here you will be able to contribute the contribution. So my contribution comes around 80 per product. Whether the entire 80 rupees is my profit? No, definitely it's not your entire profit. So how much the owner can take away as a profit for daily home expenses and all. So for that purpose, you prepare this cash flow like this. So cash flow statement. Cash flow statement means on weekly basis you prepare. On weekly basis, you prepare some cash flow statements. So basically, cash flow statement, you consider some receipts as desirable receipts and maintainable receipts, and vital, essential, desirable. So some operation people are also as part of participants. So they know what is inventory management is, where principle is there, vital, essential, desirable. So same thing we are following in payment side also. So what are those things? Here you understand these vital things. If you are not making payment now, your business will be shut down. You can't run the business. Your business will be immediately closed. So those expenses are vital. So that we mark as red area. This is very red area. And essential also, it's very much required to run your business. So this is, if you are not spending now, you will close down the business. These expenses, if you are not spending now, it will be affecting you not immediately, but within a week you will be suffering. Yeah. So such payments are considered as essential, and vital are the expenses which will make your business to be closed immediately. Immediately it will be get closed. So for this, you maintain some amount as maintainable profit. So okay. So this collection, this green area, you allocate for this one. Okay. So why I am saying now, this maintainable means minimum profit, minimum desirable profit. Okay. Minimum desirable profit. Maintainable means minimum desirable receipt. Minimum desirable receipt, what it means minimum maintainable output. See, my products, whatever the product I am selling, whatever the product or whatever the service I am doing, some customers will be there, they will buy, who will be the supplier? Who will be the supplier? I don't need to go for selling them at more price or less price. I don't need any sales promotion. They need the product. I am one of the supplier. Definitely they will come to me. So you categorize those customers and consider them as a maintainable receipt. So definitely, see, suppose I am opening a petty shop now, definitely some customers will come, even without any sales promotion, even without any sales related activity, marketing related activity I am doing, some customers will be there because the product will be required, they will come and buy the product. Those are those maintainable customers. So from them, who whatever you are collecting, that money you allocate for this vital and essential, because if I open the shop now, this money definitely will come. So this money should only be used for this ready area. Definitely it will be there. And desirable will be there. So this desirable means only if you market, only if you market your product, only if you market your product, you will receive this money. You will receive this money. You will receive this money. This will be your premium product. So mostly premium product requires some marketing push. So those things you categorize as a desirable. So some weeks this may not arise. Some weeks only it will come. Sometimes some customers will not come. See, suppose I am in a textile shop, silk sarees, people will not come and maintain buy every day, but people will buy ordinary cloth. So ordinary cloth is my maintainable revenue that I will use for this one. And this is my desirable. Desirable means this is what I can use again this desirable. Whenever a premium customer comes, whenever my premium customer pays, then only I will pay this payment, otherwise I won't pay. Now I will tell you what are those expenses that will be helpful for you to understand. See, my customer collection surplus from investment, this I can use. Customer collection is premium customer, this here you are using premium customer at a huge profit, and this is my ordinary customer. So your ordinary customer you maintain for this red area, and this premium collection you maintain for this desirable. So what are the payments you are having? Supplier payment. Only if I am able to collect from a premium customer, I will pay my supplier payment. Otherwise, I won't pay my supplier payment. This will help you for your cash flow. This will very well helpful for your cash flow, because supplier is the person who is not charging any interest, but your bank payment, bank interest definitely is interest payable, so that you match with this ordinary collection. Whatever I am collecting, this money, whatever you are collecting here, should not be used for this money. So some color coding is wrongly given, but this money should never be used for paying this one, because ultimately you will lose the money. Whenever this money is there, this customer may not come. See, suppose I am having a interest payment in first week, I am trying to pay from this money now. If that customer doesn't come, now it won't be possible for you to pay the money. So, but this customer will definitely come. This customer will definitely come. So always try to keep your expenses under this category, below this level, or try to have this money more than this income, than this expenditure. So try to have your maintainable cash receipt, maintainable cash receipt more than vital and essential payment. So here you are having option, either you can increase this maintainable profit, increase maintainable cash receipt, try to maximize this, or reduce this one so that it will be within the limit. Either you can go and reduce this vital and essential payments. So these should be in your control. Like how we have seen earlier, you should sell only if there is positive contribution. Here you need to on weekly basis. This needs to be done on weekly basis. Then only we can manage the business. So this is purely on cash flow basis. So here we have seen whether I am getting a profit or not, whether I am able to monitor my supplier payments and all. This appears to be a little bit clumsy. But here, this you can very well maintain, because this is fully based on cash. On daily basis, you maintain in either in Excel or in some other source, or even in a written note, you maintain that. You need to regularly monitor how much I am collecting here. Only if I collect money under premium category, I will pay for this one. Here only we are saying infrastructure and your household expenses. Household expenses. This also you need to spend only if you are getting this money. See, all this requires discipline, business discipline, cash discipline. This is what discipline in business. Discipline in business means having color coding. business means having color coding for the money. Though money does not have color, but we need to separately have a color. Color coding like this means this should be utilized for this purpose. So this we will make it as a green, so that it will be easily identifiable. And this is what red. So this red should be matched against red and green should be matched against green. This is what you need to do. Okay. If you are not doing in this manner now, then definitely there will be problem. Okay. So these are the critical payments. Definitely you know that this customer will come. So that money you pay for this thing. Here also some lag will be there. It won't be matched. You are able to match first week payment with the first week collection. So that time you require money. So that time you use the second week money also for this purpose. And if any premium customer comes also, that money you use for this purpose and not for this purpose. Okay. So this money should be used only if you are having surplus money after meeting out this week's payment and next week's expected payment also. If you are able to do now, that will make you to do the business very good, very good. Definitely you won't go for any crisis and crisis situation, because always it's better to keep the working capital flow in the business. Working capital will flow if you are maintaining the cash in this manner only. Okay, that is very much required. Okay. So turnover ratio. Turnover ratio means what I want to say is always try to have your supplier days. That's what we have seen. Supplier days should be more than your customer days. Supplier days should be more than your customer days. So it should be more than your customer days. That means if my supplier is giving 60 days of credit, I should have a customer. I need to try 60 days of credit means try to collect your customer days. That means your inventory days. This is your inventory. You are converting your raw material into finished goods. So raw material to finished goods. Then my customer collection. Customer I am giving credit for customer collection. So customer collection I am giving only 30 days. So this takes me only 15 days. 15 days inventory only I am keeping. I am not storing more inventory in my raw material. So totally here you are having 45 days. So this will be a good business. So this itself will tell you that my business is going in good. So but how to calculate this turnover ratio, how to work out on that, will need little bit of understanding. But currently we understand that always try to keep a lesser number of customer days and lesser number of inventory days than your supply days. Sure. Try to match that one. It may not exactly match in that manner, but try to at least 80 or 70% of your business you do in this manner. That will give you a better future. Sure. So this is what we are covering. So summary, this is the summary of what we have learned. Okay. So contribution is should be covering the indirect and personal expenses, whatever house expenses required, it should cover. And consistently you should follow your direct expense sales ratio. Direct expense sales ratio means this is what the reverse of this one. Whatever direct expense I am having, this you add together and that divided by the revenue. It should be consistently maintained. It should not increase in any way. See, suppose here I am having a direct expense of 80 and my selling price is 160. So it would be 80 divided by 160 is 50%. Try to maintain this percentage. Never exceed this percentage. Never exceed this percentage. That will definitely have a trouble. Definitely it will have a trouble. Then automatically it will make that your contribution is not having, you are not able to get some good contribution. That will definitely affect the thing. So this is the basic learning with respect to income statement. And the long-term fund requirement should be satisfied by long-term loan, and short-term fund requirement should be satisfied by short-term loan. And owner should withdraw only the profit for personal expense. Owner should not withdraw the others' money. Profit only should be used. And cash flow statement we have seen, receipt should be desirable, maintainable, payments weighted. Weekly analysis you do. If you are a business executive means definitely you need to do weekly basis. Then only it will be possible. Whether your business is going good or bad, this needs to be done. That discipline should be there. So that should be there. Yeah. And the turnover ratio, supply days as there, and that you need to calculate, and profit. These and all, as being a MDP program, we are separately having. So that program we will cover. That program we will cover because it will take more time. But to understand that always your supply days should be more than your industry days. But in some industry it won't be possible. But you try to convince your supplier saying that since because I'm not able to sell the product, I can't give you money. So this should be maintained. That means this red area should be used for this red, and this green area should be used for this green area. Sure. So this is what basically I thought of sharing with you. So now I will give you one pool. Sure. As part of Zoom, we will give you one pool that you participate, that will give us some feedback. So any other doubt, you can now type in the chat box. In the meantime, you participate in the pool. Yeah. So you will be given with some pool link so that you answer the pool so that we will be able to get the answers and understand. In the meantime, if you are having any doubt now, you type in the chat box. That will be easy for us. And if you are having any specific questions also, you can type that. Another 10 minutes we can spend for answering your sessions, answering your questions and all. So if you are having any questions, you can unmute yourself and can participate also. That's now possible. Any doubt, any questions, either you type in the chat box or unmute yourself and you ask your doubts. Unable to mute.
Sir, I have raised a question to you. Can you read it in the chat box? It is like you have mentioned that reducing product pricing is not a good habit.
Sorry, sir, I can't get your question.
You had mentioned in the training that reducing the product pricing is not a good habit recently.
Yes, sir.
So recently HUL has reduced their product pricing for the detergent business. So can you please elaborate on that?
So in that scenario, you try to reduce your direct expenses if possible. If that's also not possible, try to minimize your indirect expenses, because not able to increase the price, whether it is a permanent situation or a temporary situation for your business. That means you are saying that you are not able to increase your selling price, isn't it?
So as such in a COVID situation, it may be in short term. I don't think so. It is a long term.
Then you will be able to overcome this situation. So try to minimize your fixed expenses. Whenever you are in crisis or you are not able to meet out the expenses, you try to reduce your indirect expenses, reduce all your indirect expenses. So reduce all these expenses, avoid these things. So only many companies are laying off their employees. So these you reduce at least for 1 or 2 years, or at least for 6 months minimum. So then you will be able to increase the price once the situation improves.
Okay. Thank you.
Okay, thank you very much, sir. So Vignesh has asked displaying the working statement sheet. So this is what working statement or any other sheet you want to see? So now all the participants can speak. You can ask your doubt also. Okay, this one. Okay, very good. So then Prem has asked, we are not supposed to use short-term funds for vital and essential also, or some flexibility can we have? This you can use, vital and essential. This cash flow does not mean that you need to have short-term or long-term. This money you use for this purpose. Okay, mostly this and all short-term only. So this money you can use for this purpose, that is allowed. That you can go. If business is, Balasubramanian has asked, if business is going in loss, no cash flow, what to do the fixed assets? Better you try for selling those assets. Better trying for some, you identify assets which cannot be used for future. So for the purpose, you need to calculate the return on fixed assets. Return on fixed assets on formula is there. So that is your total revenue divided by fixed assets. In simple terms, it means that it is the non-income generating assets. You identify those assets and sell those assets, earn some cash, that will be helpful for you to run the business for short-term purpose. So whenever business is loss, most of the companies try to sell their non-income generating fixed assets. So that you identify and sell. That will help you for some recovery, some amount of recovery it will help. So any other doubts?
So you told that contribution is important to consider the products, right, sir?
Yes.
So if take an example, I'm taking an example like we got a contribution for the product, but the end of all the indirect expenses, we are at only BEP only, break even price only.
Okay.
So can we take any risk to continue that product, or any other measures we have to?
No, that 1 or 2 years for short-term purpose, you can continue like that. But if you are confident that continuing at that level, you can increase your market share and you will get a concrete customer by selling at that price, you can continue. But if you are pretty not clear that the customer will continue even if you are selling at that price, better you avoid those products. That is a very risky situation that we need to avoid.
Yes, sir. Okay, fine, sir.
Professor is there, right? You can note down the questions and you can later on ask him, right? You are going to be there in the system for lunch. So let's give priority for the outsiders, please. Okay. Note down your questions,
sir,
appreciate it. Okay, Chaitanya. Yeah.
Okay, sir.
I'm Arun here. So, yeah, when you say a product does not have a positive contribution, you are specific to a product or the business as such.
No, product. It's specific to the product because direct expense we can calculate for the product. It's not the business as such. Some product will be having positive contribution. Some product may be having negative contribution. But if you are having more amount of positive contribution, you can continue with the negative contribution so that you will be in that business also. So that positive contribution product will cover up the negative contribution product. So that you can do. But mostly you need to have high amount of positive contribution product. It's not business because running a business with positive contribution is very difficult in some corona situation or some business slowdown and all. But at least you have some premium product which will have positive contribution. I hope I have answered your question, sir.
Yeah, thank you.
And Vishnunadan has asked what happens if service charges are not possible to increase, but direct expenses are increasing, then you need to go for cost benefit analysis. You need to go and rework on your direct expenses, try for some cost reduction program. That is a huge exercise. You need to appoint some consultant or you yourself has to work out that whether I can improve on my direct expense and reduce it permanently. So that we need to do. In that manner only, Tata Motors has launched the Tata Nano. Though they are manufacturing cars at 3 lakh rupees or 4 lakh rupees. They are able to manufacture a car at 1 lakh rupees. So that you need to go for some target costing techniques, some costing techniques and some strategy also you need to work out. So that will take minimum 6 months. 6 months time, you can restructure your entire business so that you will arrive at a low level of direct expense. So that we can work out, sir. And also say to us, what is the advice for the current COVID situation for business operation? So for current COVID situation, you need to float with the business, float in the business, whatever profit you are earning, you do. If you are earning a lesser profit, now you continue, don't jump for any new venture. The situation will come back. Still, it's not come back. People still are skeptical about the future. So at least 1 or 2 months, you continue with whatever you are doing. Don't go for higher fixed asset investment. Don't go for new product launching. The situation will come. You prepare yourself. You equip yourself for the good future, which we are expecting. Once it comes now, you jump into the market. So that's the idea we can do in this COVID situation. Hope I have answered. Balasubramanian sir. Any other answers? Any other questions? So any other questions, sir? If no other questions, that means can we end up our session? Can the Excel? Yes, definitely. The Excel sheet and the presentation will be shared to you. It will be shared.
Basu, are you there?
Basu.
Yes, Balaji?
Yes, sir. He will come, sir. Wait, sir. Balaji, sir.
Poll answers you can discuss. Poll answers.
No, we will discuss with the poll answers. The poll answer, first one is contribution means. Most of the participants have answered that correctly.
In polling.
So most of the participants have responded correctly. Contribution means income earned in excess of direct expenses. Second thing is long-term fund should be used only for long-term purpose. That's also most of the 88% of the participants has given the correct answer. Working capital is current asset minus current liability, 96%, very good correct answer. Turnover ratio are used to measure the efficiency. So mostly 42%, okay, good. So that we have not discussed much because we are not having sufficient time. So hopefully what I have delivered is being reached. All have responded in the correct manner. So thank you for the opportunity given, and in future definitely we'll meet. You participate in the MDP program and you can learn better in TSM. Okay. Thank you.
So thank you, Professor Arunkumar, and thank you, participants. We will share you the PPT, the Excel, as well as the recording of the webinar. We will share with your email IDs. We have your email IDs. So we'll send you participation certificate as well. Okay. So thank you for your participation. We'll meet again next week for the webinar by Professor Rana Pratap on investing in crisis time. So we'll meet you all next week. Thank you.
Thank you, Arun sir. Thank you, Balaji. Thank you all.
Thank you, sir.
Thank you, Akash. Thank you, students. Thank you, executives from other outside. Yeah.
Thank you, sir. Thank you so much.